Hello, everyone, and welcome to the market opening bell for Friday, June 6th, 2025. On Thursday, US President Donald Trump held a phone call with Chinese President Xi Jinping, marking the first formal contact between the two leaders since Trump's second term began. The last call was in January, before the US presidential inauguration. Trump posted on social media that the very good 90-minute conversation focused primarily on trade issues, had a highly positive impact on both countries. Trade officials from both nations are set to meet soon at a yet-to-be-determined location. Hong Kong stocks rose on Thursday, supported by a better-than-expected Caixin China Services PMI and a China Securities Journal report, suggesting the People's Bank of China might further cut the reserve requirement ratio to ensure ample liquidity in the second half of the year. The Hang Seng Index opened 174 points higher, later peaking at 23,911 with a gain of 257 points and closed up 252 points or 1.1% at 23,906. The HSCEI rose 107 points or 1.3% to 8,684 and the Hang Seng Tech Index climbed 100 points or 1.9% to 5,319. Total market turnover was 222 billion Hong Kong dollars. Southbound funds net purchased 741 million in Hong Kong stocks with notable flows. Net buys Meituan 1.075 billion, BYD 384 million, Lao Pao Gold 236 million. Zhong'an Online 162 million, PopMart 135 million. Net sales Xiaomi 1.612 billion, Tencent 1.454 billion, China Mobile 441 million, Alibaba 228 million, Bank of China 189 million, SMIC 129 million. Southbound funds have net bought Meituan for 14 consecutive days, totaling 15.485 billion. BYD for 3 days, totaling 1.288 billion. Net sold Tencent for 5 days, totaling 4.521 billion. And Xiaomi for 3 days, totaling 4.118 billion. Technical analysis, the Hang Seng reached the high of 23,911, just shy of the May 21st peak of 23,917, but closed at 23,906, the highest since March 20. The 9-day RSI shows slight divergence. A breakout above 24,000 could target 24,400 and 24,750, with support at 23,450. Shanghai and Shenzhen markets also rose with increased turnover. The Shanghai Composite gained 8 points or 0.2% to 3,384, while the Shenzhen Component Index rose 59 points or 0.6% to 10,203. Combined turnover was 1.29 trillion yuan, up 137.3 billion yuan from the previous day. The renminbi central parity rate was 7.1865 per US dollar, up 21 pips. May's Caixin China General Services PMI rose from 50.7 to 51.1, slightly above the expected 51, driven by the May Day holiday effect with increased travel and dining boosting service sector activity. In the Hong Kong market, mobile equipment stocks surged with Goldtech up 7.9% and Sunny Optical up over 5%. Huawei's Pura 80 series, a new product launch, is set for June 11th, while Apple's WWDC Developer Conference between June 10 and 14 is expected to unveil major OS upgrades. Analysts note Huawei and Apple's innovation rates could enhance user experiences, impacting supply chains and capital markets. China Academy of Information and Communications Technology reported April 2025 mobile shipments of 25.038 million units, up 4% year-on-year, with 94.708 million units shipped in the first 4 months, up 3.5% year-on-year. Counterpoint Research lowered its 2025 global smartphone shipment growth forecast from 4.2% to 1.9%, citing U.S. tariff uncertainties, and cut China's growth to near flat. Apple and Samsung shipments are expected to decline as costs are passed to consumers. In the U.S. market, the U.S. China leaders core initially lifted down by 173 points, but news of a Trump Musk fallout caused Tesla stock to plunge over 14%, wiping out $100 billion in market value. The Dow closed down 108 points or 0.25% at 42,319. The S&P 500 fell 31 points or 0.5% to 5,939, and the Nasdaq dropped 162 points or 0.8% to 19,298. The Nasdaq Golden Dragon Index rose 0.54%. Stablecoin issuer Circle debuted on Thursday, surging over 1.8 times its IPO price of $31 to $88.88 intraday, closing at $83.23, up 1.68 times. The European Central Bank cut its key interest rate by 25 basis points in June as expected. It forecast 2025 inflation at 2%, down from 2.3%, 2026 at 1.6%, down from 1.9%, and 2027 at 2%. Core inflation is projected at 2.4% in 2025, falling to 1.9% in 2026 to 2027. GDP growth is expected at 0.9% in 2025, 1.1% in 2026, down from 1.2%, and 1.3% in 2027, driven by rising real incomes, a strong labor market, and government investment, despite trade policy uncertainties curbing exports and business investment. The Bureau of Economic Analysis reported on April 2025 U.S. trade deficit of $61.6 billion, the lowest since August 2023, down from $138.3 billion in March. Imports fell 16.3% to $351 billion, a 6-month low, after a March peak of $419.4 billion amid tariff anticipation. Exports rose 3% to a record $289.4 billion. The U.S.-China goods trade deficit shrank to $19.7 billion from $24.2 billion, and the EU deficit dropped from $48 billion to $17.9 billion. The Bureau of Labor Statistics reported a 1.5% drop in Q1 2025 non-farm business sector labor productivity, worse than the initial 0.8% estimate and down from 1.7% gain last quarter, the first decline since Q2 2022, driven by falling output and rising labor costs. Initial jobless claims for the week ending May 31st rose by 8,000 to 247,000, up from a revised 239,000 and above the expected 235,000, the highest since October 2024. This signals early labor market softening amid economic uncertainty. Challenger, Gray, and Christmas reported 93,816 job cuts in May, the lowest in 4 months, down from 105,441 in April. Year-to-date cuts through May reached 696,309, up 80% year-on-year, with 284,044 linked to the Department of Government Efficiency. Tonight's May non-farm payrolls are expected to show 130,000 new jobs, with unemployment steady at 4.2%. Our stock pick today is QYUNS Therapeutics, stock code 2509. QYUNS Therapeutics is a clinical stage biotechnology company focused on biologic therapies for autoimmune and allergic diseases, with a proprietary drug pipeline and commercial scale in-house manufacturing capabilities. Its product pipeline covers four major areas of autoimmune and allergic diseases: skin, rheumatic, respiratory, and gastrointestinal disorders. The group currently has two core products, QX002N and QX005N, both developed in-house, targeting ankylosing spondylitis and atopic dermatitis, prurigo nodularis, respectively. In addition to its core products, the group has seven other pipeline candidates, including a drug for psoriasis that received a drug registration certificate from the National Medical Products Administration in October 2024 under the brand name Xylazine, making it the first ustekinumab biosimilar injection in China. The group's manufacturing facilities are built in strict compliance with current Good Manufacturing Practices (CGMP) standards of China, the US, and the EU, and have successfully obtained a drug manufacturing license. The production base includes one bulk drug substance production line and two formulation production lines. The group has also entered strategic partnerships with various collaborators. In January 2024, it signed a technology transfer agreement with Joint Care, granting Joint Care exclusive rights to develop, manufacture, and commercialize QX008N for moderate to severe asthma in mainland China, Hong Kong, and Macau. In April 2024, it entered an exclusive out-licensing agreement with Hansoh Pharmaceutical for the development, manufacturing, and commercialization of QX004N for psoriasis in authorized regions. Under the agreement, Hansoh pay an upfront fee of 75 million yuan, with potential milestone payments up to 1.032 billion yuan for development, regulatory, and sales-based achievements, plus tiered royalties on future product sales. In July 2024, it signed a collaboration agreement with Zhongmei Huadong to co-develop QX005N in authorized regions and enhance future commercialization potential. In April 2024, it entered an out-licensing agreement with QYUNS Therapeutics, authorizing QYUNS to research, develop, register, manufacture, and commercialize QX030N for autoimmune diseases globally. In return, QYUNS Therapeutics received a non-refundable, non-creditable upfront payment of $10 million and approximately 24.88% equity in QYUNS Therapeutics. The group is also eligible for up to 545 million dollars in additional payments upon achieving specific clinical development, regulatory, and commercial milestone, plus tiered royalties on net sales of QX030N for a specified period after its first commercial sale. Recommended buy price 13.5 Hong Kong dollars. Target price $15. Stop loss $12.8. I do not hold the above mentioned stock.